Hello everyone, I hope you guys are doing well and your studies are going in full swing. Now in this video we are going to discuss about the CA final AFM RTP for May 26, and probably this is going to be my shortest RTP video for your AFM or FR. FR RTP video I've already uploaded and the link for that is there in the description, which you should refer if you have not already. But in AFM, in this time around, Institute has been a little lenient to you, and the questions that are there is zero new questions. I mean, all the questions are from either previous RTPs, MTPs, study material. It is all covered in the material, at least if you have done it with us. Otherwise, also most of these questions are likely to be covered. I'll do a quick run through. There's probably one MCQ based case which is slightly different, though even that is something which is very easily solvable, and the last traditional 2 or 3 theory questions which are there. So we'll do a very quick run through for this RTP, so that in this less than 10 minutes over here you are able to kind of be familiar with what is there in the RTP. If you have not done a particular problem or if you have left it, you should know that you should cover it because it is there in this RTP as well. Now on risk management, they've asked this question, which is a very typical question that they ask you of, let us say, Mr. Bull, which was earlier there in the material as well, and based on that they've made a few MCQs. So this is based on value at risk concept. Next over here in the second one, this is based on the money market concept, and this is something that we will quickly discuss over here. Nothing which is very difficult, but there's an Indian exporting firm, Radhe and Sons, who is exporting dry fruits worth 1 million Australian dollars to someone in Sydney. They're worried about the likely depreciation of Australian dollar and that the export sum will be received after 3 months. There's no derivative contract available to hedge, so there's no forward or anything which is available to hedge for the depreciation, and there is some data given, let us say spot rate 64, and there are some 3-month interest rate, so probably you can do money market hedging. So if I were to, let us say, look at the money market hedging over here, the first thing over here is in money market hedge for a foreign currency receivable, exporter should, now you have a receivable, that is you have an asset in the foreign currency. So in order to hedge, you will take the opposite, that is you will borrow, take a liability in the foreign currency, and hence you will borrow in the Australian dollars and invest that money in the Indian rupees. So your answer should be B. In case Radhe adopts the money market strategy, the interest to compute the amount borrowed would be, well, you are borrowing in Australian dollars, and hence the relevant rate will be the Australian dollar rate, which is a 5% rate of interest. That's about it. Next, you will go to the third case. If the forward in AUD were available, then the money market hedge, but you don't know, can be superior, can be inferior. We need to compare it with the forward to figure out the cost efficiency. And interest rate parity assumes, now interest rate parity is based on the no arbitrage assumption, which means the markets are efficient, there should be no ideal arbitrage opportunity. So efficient markets with no arbitrage opportunities if there is interest rate parity. Now these are very easy MCQs. Institute shows its true colors in the main exam by giving completely different MCQs. Don't be misled. Be prepared for detailed questions over here in RTP. At least they have reduced their workload, your workload over here, but don't take this as a proxy. We would love if questions like this come in the main exam, but I'm saying you should be mentally prepared for even competitive questions. Okay, then you look at your questions, other questions pertaining to advanced capital budgeting. Well, this is a very similar question which is there on the optimum replacement time. So this is a question pertaining to optimum replacement time which is there in your capital budgeting. So you have various options on when should I replace after 1 year, 2 years, 3 years, for which you calculate equated annualized cost, and you find whichever gives you the lowest should be your optimum replacement time. Okay, next, when you look at security valuation, you have this question on convertible bonds where you have these various terms like the conversion value, downside risk, conversion premium, conversion parity price, exactly same sum that is there in our material as well, and you would have practiced this irrespective. So this is, I think, question number 4 on security valuation for convertibles. Then in another question for valuation, they've had this equity share where, let's say, there is a bonus and that equity share is later sold, so you have to find the maximum purchase price for that. Again, a very similar question that we've done. So they've asked you regarding convertible bonds, they've asked you regarding equity valuation in case of a bonus and a possible sale after a few years. Next, when you look at business valuation, they have asked you a question of economic value added, one of the most common and the popular questions which is there. So this is economic value added, and they've also asked you market value added, very similar, some very basic question. So EVA is being asked in the RTP. Then there is binomial and risk neutral method over here. This is similar to the November 23 or so exam question, where you have a continuously compounded rate and you have been asked to find the value using the binomial method as well as the risk neutral method. So that is based on this question, which is very similar to the question that we would have done. In terms of interest rates, there is this question regarding swap, but thankfully you don't have to design a swap or something. You have been given data regarding the fixed rate payment and the floating rate payment, and you have to do the workings. Usually the fixed rate payment happens based on 30/360 rule, which they have mentioned, and the floating leg, usually that's what the institute does, is based on the actual by 360 rule, which is the case usually. So this is regarding the swap. In portfolio management, there is this very typical question which I think was similar to question 21 or so of our material, where we are trying to find the beta value of the company. You can do this using the correlation method, or you can even do this using the regression method. So regression method is that formula that you are going to follow for the purpose of calculating beta, which you can use either of these methods. They'll give you approximately the same answer. On international financial management or forex, as a case may be, this is a question where you have two possible investment opportunities of surplus funds that you might have. Either you invest it in Japan, either you invest it in US. You will try to figure out which of them is more favorable. Maybe over here, at least in the study material sum that was there, I think this is very similar to that. You get almost similar return, in which case you may be indifferent, or you might try to invest in that investment opportunity which gives you, let us say, a lower risk. Otherwise your value will be similar to I think question 76 or so of the foreign exchange chapter that is there. Then you have in mergers, there is this question where you have different growth rates. So there is a company acquiring long is, let's say, acquiring tall. Earlier the rate was 6%, later the rate is 8%. This is one of the important concepts that is there in mergers, which they have tried to test over here. So that is regarding mergers. In mutual fund, one of their favorite dividend equalization questions, which is the same question that comes every time when there is a dividend equalization. That is the same question which has been put up over here as well, just that the numbers are different. So it's good if you have done that question earlier and you can just practice using different number sets. So you can use this question for dividend equalization practice. In security analysis, I think there is this concept of exponential moving average, and based on exponential moving average, where you take the exponent factor as 2 divided by n plus 1 and accordingly solve. So over here, if you have to find for a 21 day, that is I think 2 divided by 21 plus 1, and you can find the moving average accordingly, and that's about it. Then you have this typical theory questions that you should definitely review. So the key decisions within the scope of financial strategy. Now, as a finance manager, you'll have to look at the financing decisions, where to raise funds, investing decisions, where to deploy funds, dividend decisions, how much of them should be distributed, and maybe portfolio decisions on how to allocate, reallocate. That's about it. You can review the theory. Risk associated with blockchain technology, it's a theory question where you are looking at, there's no regulator, it is based on the underlying technology, consensus mechanism. If those consensus mechanism fails, what will happen? So they're trying to look at the risks regarding the blockchain technology, no regulation being there as well, and completely dependent on the underlying technology, and if that technology is tampered upon, then there can be a risk. You need a huge volume of data, so there should be enough data processing capabilities. Venture capital financing, it's very long term, highly risky, investing in fairly illiquid portfolios, and that's about it. So I mean, it's for a change, a pleasure to see that the institute has not really increased your burden in your preparation, and this is probably one of the shortest RTP videos also that we have. So if you kind of if there is some question that you think you have not done earlier properly, because it is there in RTP, these are the questions that you should definitely at least touch upon from your material. All these questions are there in our material, or whichever material you would have referred, you should be able to find it. Okay, so that should be it. I'll see you soon with more videos. Till then, wish you all the very best. Study well. God bless you all, and take care.